Hi, welcome to Let's Talk Bonds, the bond market podcast from INR Bonds. I'm Arjun Patsati here. And in this podcast, we are going to run you through the last 1 year where the Indian lending space has been through a down cycle. And this has clearly derailed some of the high confidence that the market had since the 2020 COVID, where lenders have been on a one-way street up in terms of growth, in terms of valuations, with bonds finding a lot of favor with investors. And suddenly, the last 1 year, things have turned around very sharply in some of the sectors, and this has dented some kind of faith in the Indian bond market for the higher yield bond NBFC bonds, especially the higher yielding NBFC bonds. Bond investors have been a little rattled because of these some of the kinds of bad loans that these lenders have faced. Having said that, what has now come to the rescue of the Indian bond investors is foreign capital has reinforced their faith in these lenders. And there have been a lot of cases where the faith has then infused the confidence of Indian bond investors into NBFC bonds, especially the higher yielding bonds of various segments of the lending space. Before that, let me just give the risk of investing in bonds to investors. Bonds carry default risk, that is credit risk, which means that issuers can default on their obligations to the investors. It carries interest rate risk, that prices of bonds can go up and down. And it also carries liquidity risk, where the impact cost of buying and selling can be high. Investors have to be aware of these risks before investing in bonds. Now, back to the topic of Indian foreign capital is providing confidence to Indian bond investors in NBFCs. Yeah, we have definitely seen a very sharp turnaround in the fortunes of lenders, many lenders, in the last 1 year, especially in a few sectors. In the microfinance space, the lenders have been badly affected. Some of them have reported continuous losses for the last 4 quarters. Many of them have breached covenants. There have been a lot of concerns. Bond yields have shot up substantially for many of these lenders. And these lenders had to go in for confidence capital to boost the confidence of bond investors and provide liquidity to the lenders. And even in other spaces, including MSME, unsecured MSME, and small business loans, there have been a lot of issues facing the lenders, and some of them have also gone through tough times. In some unsecured personal loan spaces, some of them have gone through tough times as well. Some of them have done very well. And also, but in all this, in all the downturn in the last 1 year, and if you take the overall picture of credit growth since 23, we have seen credit growth of the whole industry, banking in the sector coming off from 20% upwards to 10%. And this clearly shows that banks, there has been a sharp downtrend in credit in the last 1 year, largely because of the fact that there have been more worries on the credit cost, credit quality, the asset quality and the deteriorating asset quality of the lenders. So that has led to a downturn in credit growth. And this has impacted across the sectors as well in terms of the NBFCs, where many of them, a lot of new NBFCs have come up based on technology-based lending, digital first. A lot of them have targeted unsecured personal loans and some MSME, SME loans, unsecured. There have also been obviously the secured loan lenders, old commercial vehicle lenders, second-hand commercial vehicle lenders, etc. A lot of these have come up based on the fact that Indian economy is one of the fastest growing economy in the world. The demand for credit has been picking up substantially, India is a consumption story, everything. But having said that, there have been definitely a very huge amount of over lending, especially to provide growth. Many of these lenders have been funded by private equity who are looking at growth for these for their companies, and so to provide that growth, they have been lending at a very fast pace, cutting down on the underwriting, okay, credit underwriting. And the risk management policies have not been not been very strong. All these have led to the sudden sharp rise in the bad loans, given that there's been such very strong growth in assets under management of these lenders. But in the last 1 year, what has what has really changed, especially in the outlook for these Indian finance itself in terms of the lending space, is that even though there's been a very strong credit down cycle, lenders have been underperforming, some of them have been pretty much close to insolvency, etc. One factor that is standing out is that foreign capital has been consistently supporting these issuers, and that's providing a lot of confidence boost to investors in bonds of these companies. Now, some of the large investments that have been taking place is that starting with Fullerton, which gained the promoter control over lending card finance. uh, Fullerton is a Temasek subsidiary, rated AAA globally, and they have provided confidence to lending card finance by taking the stake from over 45% to to close to 56%, and likely to take more, and infusing a lot of capital into the company. This is one confidence or boost to a lending card that again saw lending card was an unsecured MSME SME lender. Now they had also faced the issues of downturn in credit. So this has lent a confidence boost to bond investors of lending card. The other is the in the microfinance space. We had Spandana Spurti, which is very largely owned by Kedara Capital, a very large private equity firm, and they also suffered consecutive periods of losses, and they had to write off a huge amount of bad loans. But then, as a confidence boost, their bond yields were shot up from by about 200, 300 basis points, and to provide a confidence boost to investors and the financiers of Spandana Spurti, they had floated a rights issue for 400 crores, which was fully subscribed, largely by the existing investors itself. A lot of this by foreign capital coming in, and you had Fusion Microfinance, which again faced the same issues in the microfinance space, and almost the net worth was already almost wiped out. And then you had Warburg Pincus taking over promoter control of this company, providing equity. Again, a confidence boost to lenders to this company as well, including the bond investors. You had then in the larger spaces, you had Bain Capital now taking a stake in Manappuram Finance, which is the promoter of Ashirwad Microfinance. So Ashirwad too is getting investors are too getting a confidence boost, despite the fact that there's been a very strong downturn in the microfinance space. You have you have Japanese banks, Mizuho, taking over full control of Capsave, which was an NBFC, and from the company's bonds have been on a singular down yields have been on a singular downtrend path, and the current rating of AAA for these bonds have taken yields down by 300, 400 basis points. You have the latest announcement by the Abu Dhabi, by the Saman Capital company, that Abu Dhabi investment fund is taking over. I mean, is infusing close to $1 billion of capital into the company, plus floating an open offer to take their control over 60% and take promoter control of the company. Now, this is lending a huge amount of confidence to bond investors of Saman Capital. Though the lender was rated AA, the bond yields were trading at close to A plus and A minus, A to A minus bond yields levels, largely because of legacy factors. But now this has come and this huge amount of capital boost that the Abu Dhabi fund is showing is clearly lending a lot of confidence to investors in this company, bond investors in this company, and the whole scenario outlook for this issuer changes if this whole deal goes through with all the necessary approvals, etc. So clearly, one is so and the underlying theme here is that despite huge amount of issues faced by lenders in the Indian market, largely because of a sudden cyclical downtrend in the credit cycle, you have the foreign investors continuing to reinforce their faith in the Indian lending scenario, in the Indian economy, and in the Indian story of the fact that India is still a low debt company in terms of debt to GDP ratio, and there is a lot of room to grow, especially in the private sector level. And there, hence, that faith is getting reinforced, more and more reinforced by these foreign investors. And this is providing a lot of capital to a lot of confidence to bond investors and in NBFCs that are trying to lend to the different in the non-traditional space where unbanked populations, etc., trying to improve cost the delivery and time of cost delivery and delivery time of credit to many of the borrowers that are faced a huge amount of issues trying to get debt in the traditional way. And clearly, that is one of the strongest growth drivers in the economy. Hence, this kind of confidence that is provided by foreign investors into the Indian lending space is definitely something to cheer about for the Indian bond market, especially the higher yielding or the lower rated corporate bond market, where Indian government regulators are very keen to increase the depth of this market by widening the participation of investors in these bonds. But having said that, clearly there is a risk in investing in these bonds, and investors do need to be aware of the risk. But one of the key risks which we have faced is how do these companies handle cyclical downturns? And while they have been hit hard by the fact that these downturns came suddenly in the last 1 year, the kind of capital boost that these lenders have got from their main promoters, or the fact that some of the large foreign investors have come and taken over these promoter control of these companies, does provide a huge amount of confidence to both the policymakers, the government, the Indian bond investors as well. Thank you for listening in, and do follow us on all podcast channels. Let's Talk Bonds by INR Bonds.